if, not when. Okay, if you are only in this for hopium, I'm just going to say it straight up, this video is not for you. If you want to be hopeful but cautious, which is where I stand right now, then you might want to stick around a bit. And I'm going to say this again. I've said it several times during my live streams again. My mindset right now when it comes to crypto is if, but not when. If Bitcoin puts in a new all-time high, if altcoins, we have a major alt season in euphoria and all the insanity that we've seen with previous bull runs, with previous cycles and all of that, that would be fantastic. I am all here for that. I am operating under the assumption that that is going to happen, but I really want myself and I want any of you listening to protect yourselves from getting absolutely wrecked, because that is on the table. And I'm talking about influencers with $1 million accounts, multi-million dollar accounts, potentially having to drive for Uber. It's on the table. That's all I'm saying. Okay, so let's get into this and let me explain to you why my mindset is if, but not when. And I hope it becomes when, but I have a game plan in place. And before we dive on into this video is not financial advice. This is for entertainment purposes only. Please do your own research. I am not a financial advisor. And while I appreciate that so many of you are hopping into different from all over the place, you've got to hit the subscribe button. I am making content every day, new price prediction videos every day at 6 a.m. Eastern time, and other content throughout the day. Hit that subscribe button and turn on the notification button while you are at it. Okay, so here is the order of the presentation. I'm going to exit this slideshow right after this, but I want to remind you of a few things and maybe even introduce some new things to you. And so here's what I want to cover essentially. Number one, I want to give you a reminder for my price target. You may see my price target spreadsheet. It's in the description of every video with my price targets for a normal cycle scenario and then a bearish scenario, and that is the if. And I want to remind you about the if there. But then I also want to cover historic yield curve inversions and then point to 05 and 6 as a best case scenario for what we have moving forward. And I want to point you to historic federal fund rates and how lowering rates has always, literally every time, been bearish, that we have entered into a recession every time. And I also want to point out from that the blessing / curse of the 2020 COVID Black Swan event, and, you know, analyze like, all right, what would happen if something similar happened this time around? If a Black Swan event would happen, that would actually, for the short term, for the next year and a half, be a best case scenario in my mind. And then I want to share with you what I'm looking for with Bitcoin, but I also want to share with you what I'm looking for with the Dow Jones and the NASDAQ. And I'm giving credit to the blockchain backer here. This is the only thing that I'm getting from his videos. If you follow his channel, that part right there is it. Everything else is just straight out of my own head. Okay, so let me exit the slideshow and let's go into this. So my price targets. You can see all of my videos that I have links to on this spreadsheet, which you can see. You can gain access to the spreadsheet. Just click on the description of my video. You can see 2 price targets. And people, when they comment in my videos or when they look at the spreadsheet, it's as if this column B right here, it just doesn't even exist. And I want to tell you, I am absolutely serious that there is a possibility that these would be our price targets under a scenario where Bitcoin goes to a 702 retrace, does not put in a new all-time high, and then what I would see for different altcoins if, you know, Bitcoin peaked at $53,000, and then if altcoins, we had like a mini alt season, and then everyone's expecting that big bull run, and then it never comes. If I see signs of that, these are where I would be exiting a great deal. And I've already said I'm exiting half of my crypto portfolio at $53,000 for Bitcoin, or maybe a little under $53,000 for Bitcoin. And this is where I would be hoping that a lot of other cryptocurrencies would be if I'm at a point where I'm like, all right, I think this is a good time to exit this particular cryptocurrency to be safe. And so pay attention to column B on my spreadsheet. Okay, and I know there's a lot more information I need to fill in here. I'll get to that. But pay attention to column B, please, okay? And here's why. So historic Yield curve inversions, where did that go? There it is. Okay. Historic 10-year, 2-year is what most people look at. That's just the general consensus as to where people are looking for the yield curve inversions. And you can see every time since this chart began in 1976, every time we have had a yield curve inversion, we then had a recession. And so 2020, there was the slightest, the ever so slightest yield curve inversion. You can see it on the 10-year, 1 year. There would have been a recession in 2020. There actually was a recession in 2020. And so here's what would have happened if it wasn't for COVID, is that would have played itself out. Prices would have been suppressed, in my opinion, for a lot longer than they were. And then we would probably have had a bull run similar to that bull run in 2017, where we just kept on riding the 20-day EMA and not the 20-day EMA, the 21-week EMA and the 20-week SMA, the bull market support band. It would have been similar to that, in my opinion, where prices would have been suppressed for a little bit longer. Maybe we would have crossed an all-time high in 2021 instead of in December of 2020. And we wouldn't have had this massive injection of money right away in March of 2020, rates going down to zero immediately, but it would have taken more time to play out. And we would have seen what I think a lot of people had theories of extended cycles. There's a lot of conversation about that. We would have had, in my opinion, an extended cycle if it wasn't for the COVID black swan event. All right, but COVID, what did that bring? That brought rates down to zero, brought trillions of dollars being flooded into the market, and that gave us about a 1.5 year window where the bull run was on. And then in terms of absolute hysteria, things peaked about a year, 13 months or so later, April, May of 2021. And that was the end. I know that we did put in a little bit of a higher high for Bitcoin, but when it comes to the euphoria, the peak was spring of 2021. And so we have not only a yield curve inversion, but the most massively inverted yield curve since 1980. And so will this be worse than 2008? There are people who are saying that it's going to be worse than 2008, whatever is coming on the other end of this. And I think that a legitimate argument can be made. It's just a matter of when. And so I talked about best case scenario is 05, 06 here. So here we are. We still have an inverted yield curve. What happens is after we get uninverted, we get back to normal. That is usually when the recession comes. But we did have in 05, 06 here, an inverted yield curve, bounced back above, and then went inverted again. So, and then the big crash. We peaked, the stock market peaked in 2007, and then it dumped. It lost 60%. The Dow Jones lost 60% of its value in the span of a 1.5 years. So maybe it's 05. Maybe right now we're in 05. We have a couple more years, and maybe we'll have a normal bull run. Who knows? But this is something to be paying attention to. Next, federal fund rates. So you can see on this chart since 1955, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 being this there's a little sliver of a gray line here. 10 recessions since 1955 in the United States. And you can see the same exact theme here. Raising rates, steadily raising rates, pausing, lowering rates, recession. Raising rates, pausing, lowering, recession. Raising, pausing, lowering, recession. We do have here 1966, let's keep that in mind, okay. But the uptrend, we still have an uptrend here. Raising, pausing, lowering, trying to raise in the middle of a massive recession, lowering, recession. We raise rates, and around the time that we lower, we have a 0 to 12-month window where we enter a recession. So we have the Federal Reserve. They have been raising rates very aggressively over these last couple years. Here we are in January in 2024, and they've paused. And we have seen the market price in the first rate cut in March of this year. Now, I would call this good news. I'd consider this good news. Jerome Powell at his last Fed meeting has indicated that they're probably not going to cut rates in March. So what does that mean for me? That means that we will delay the countdown timer to the recession, to, in my opinion, a recession, maybe even a depression, something worse than what we saw in 2008. Okay? So as long as, in my head, I'm seeing a countdown timer of 0 to 12 months. The very first moment they lower rates, we have 0 to 12 months to where we need to have the bull run. It's now or never. And by that end of the 12-month window, it's most likely going to be over. And who cares about November of 2025, which is when most people are thinking that Bitcoin's going to peak. Forget about that. You know, don't be waiting until then to be like, okay, I'm going to be taking my profits. So this is something we've got it. The timer is on. And then what I wanted to say about the blessing and curse, I already say this, the blessing and curse of the COVID crash is that enough panic was entering into the markets at that time that boom, rates go to zero, money printer is turned on, and we had a year of euphoria of up only. And so what I would see if there's no kind of black swan event moving forward is a more painful drawdown than what we saw during the COVID crash that can take place over a matter of months or even a couple of years. And eventually the Fed will lower rates to zero. Make no mistake about that. We have right now $1 trillion that we are paying in interest alone on our national deficit, federal deficit. It is projected to reach, at current rate levels, $3 trillion by 2029. That is unsustainable. That will cause a loss of faith in the US dollar on a global scale that cannot be dealt with. We must lower rates in order to kick the can down the road at least. So the zero interest rates, that's coming back. It's just a matter of when. Quantitative easing is coming back. The Federal Reserve adding trillions and trillions of dollars to their balance sheet, that is coming back. It's a matter of when. And when that happens, when we see rates at zero, everyone's going to be panicking. I'm going to be super bullish, but that could happen within a year. It could happen within a few months. If there's a World War III, you never know. Or it could happen 3 or 4 years down the road. It's just probably not 3 or 4 years down the road. So all of those things, I hope I still have your attention. With all of those things in mind, we have a window. We do have a window for some kind of a bull run right now. And so this is how I'm operating. I shared this on my Twitter account. I'm going to share it here again. So this is how I'm operating right now. The yellow box. We are currently in the yellow box. We will exit this yellow box at some point. I don't know when. And my question is, will we exit the yellow box to the downside or to the upside? The upside begins right at $53,000. That is a 702 retrace. Let me draw a very lazy and quick fib right now. And you can see 702 retrace. That upper box begins, that is the top of the yellow box, the bottom of the lower box. That is Bitcoin at a $1 trillion market cap. And can you picture this? You see it on the news. Bitcoin is worth $1 trillion. It's going way higher to $4 trillion, $5 trillion. And then who knows? Is that the end? And that's why on this price target sheet, that's my bearish price target. That's a 702 retrace on the dot. Let me delete this real quick. So if we break through that and go beyond the yellow box, go into the green box. If we are in here, however long we are in here, I'm going to be of the mindset, yes, this is going to happen. My if will change to a win. And we'll see. My if will change to a win. I am still exiting at $53,000. I am exiting the green box, essentially. I'm exiting half my crypto, so I'm still going to have half my crypto. And then outside of the green box, on top of the green box, I will be mostly trading. And that is my mindset. I think that's a good mindset to have. It's not like we're not preaching hodl at this point on the upper side of the green box. We are saying take aggressive profits, so I'm going to be a trader. Now, if we get down to the red box in a non-black swan event scenario, if we get down to the red box because of a black swan, COVID-23, instead of COVID-19 or something like that. That's fine. That's not fine, but I'm going to assume that level of fear will cause the Fed to be like, all right, we're going to zero, money printer's on, we're good, America, we're feeding you all that, and world, other countries around the world will do the same thing. That's fine. I'll be very bullish at that time. But if we just see the price of Bitcoin, just like, let's say we get rejected at $53,000, we go down to this yellow box and maybe even hold that as support and then bounce higher. Cool. But if we lose the bottom of this yellow box as support, this 200-day range we were in 2023, if we lose that as support, there's a problem. Okay. There is a problem. And especially if we see other indicators of confluence with that. So this is not the only thing I'm looking at. So let's move on to the Dow Jones and the NASDAQ. And this is, like I said, I'm getting this information from the blockchain backer. And I've drawn fib charts from, this is, if you're not looking at the screen all that much, this is from the peak, the Dow Jones peak in 2007, down to the lowest level, the bottom on March 9th of 2009. So 4.236 retrace. We are within less than $1,000 of this 4.236 retrace. If I were to see a hard rejection at the 4.236 and a lower, we go below this 2022 all-time high, previous all-time high in the Dow Jones, and then for sure, if we see a lower low than this 2022 bottom, I think that's 2022. Yeah, September 2022 bottom in the stock market, we see a lower low there, and we don't see Bitcoin in all this time getting above $53,000, there's a problem. There's a problem. This is the same thing happened in the Roaring 20s. I'm taking this from the blockchain backer. Same thing happened in the Roaring 20s. We hit a 4.236 retrace. Same thing. Now, this isn't the only thing. NASDAQ, same deal. Now, for some reason, I couldn't, my chart looks different than the blockchain backer's chart here. Regardless, we are very close to the NASDAQ also hitting a 4.236 retrace from its previous all-time high in 2000 to its bottom, where the NASDAQ lost 80% of its value over the span of 2 years, and then it's been roaring, ever since then. We are very close to a 4.236 retrace here. If we see a rejection right at that level, 18,200, well, no, let me back up for a second. According to the blockchain backers charts, we are pretty much right there. So 17,000 in change. We're very close. That's 17,000. That's what it says. All right. Yeah. I mean, we're getting there. We are getting right there. So if that's the case and we get rejected there, then, and we see things start to go down, I'm going to be very nervous. And so on the positive side, because I do want to be hopeful too. Let's just say we blow through this retrace. Let's just say we have some kind of a mini melt up and we see these retrace levels move on and we still see Bitcoin not at $53,000. It's on. Game on. All right. So these are 3 different things I'm looking at. And same deal with NASDAQ. We see us blow higher on the NASDAQ. Game on. Game on. But I want to see something. I want to see Bitcoin above $53,000. I want to see more so the Dow blowing through this key level, which can happen because faith in the US dollar is shaken and people are not going to want to flee to the US dollar nearly as much as they did in 2008 and in 2000. So where are they going to flee to? Maybe they'll flee to stocks. Maybe they'll just keep it in stocks. I don't know. I want to see something. Let's see a $53,000+ Bitcoin. Let's see a 40,000+ Dow Jones Industrial Average, an 18,000+ NASDAQ Composite Index. Let's just see one of those things. And my if will most likely change to a when. But until then, I am holding tight on my seat and just waiting and watching and not getting too fearful, not getting too greedy. And I think that's the best play right now. But that is all I have for today. I just want to be sure, I talked about everything here. Let me know your thoughts in the comment section of this video. I would love to hear what you're thinking. Am I too, what's the word? PTSD. Do I have too much PTSD from the 2022 bear market? Because I know a lot of other people, they're going to be saying exactly that if they're watching this video. Or is this worth at least taking into consideration? Let me know your thoughts in the comment section of this video. Otherwise, I will most certainly be seeing you in another video. Peace.